Welcome, everyone, to another episode of Live with Suzi. I'm Suzi Khatami, the host and producer of these segments. We're very pleased to actually continue our series that we have recently started with Mr. Shane Malek regarding the financial information and any needs you may have, because we're talking to the guy who knows it all. Mr. Shane Malek is a financial consultant, a president of FMIS Inc., with many, many years of experience, 30 years plus, if you want to be more exact, with more than 3,000 very, very happy and satisfied clients. So if you do need to get in touch and have any questions, please feel free to call the toll-free number 800-477-1556. There's also a website that you may want to visit. That is www.fmisinc.com. Actually, you can follow all our talks and conversation that we have started already. This is part 6 on the website, as well as you can go to Live with Suzi on all different social media platforms, from LinkedIn to Instagram, Facebook, YouTube, and podcast, and check it all out. If you do have questions, you can obviously feel free to contact me or contact Mr. Shane Malek, ask your questions. So when we do offer this series, he can actually answer them. Shane Malek, without further ado, I'd like to welcome you back on the show. Thank you for being with us.
Hi, Suzi. Thank you for having me. Thank you so much. My God, what a long introduction. I hope I deserve that.
Totally. You deserve way more than that. It's just that we have such limited time that I try to condense it and make it short and sweet, as the saying goes.
Thank you. You're sweet. Thank you.
Sure. So how's it going? What is the financial world looking like now in 2021?
Quite a few things, actually. Normally we talk about how we can come to a point in life that we have sufficient money that kind of continue living the lifestyle that we've been used to without the work part of it. The retirement section of your life, basically. However, I had a couple of issues that I'd like to kind of point out today. In fact, this is a case that I've been dealing with actually all day today, that I wanted to somewhat share with you guys, because it's important to understand really what I'm really trying to portray here, the importance of the impact that this situation may have on you tax-wise if you're not aware, and how you can kind of work around it in order to sort of work for you. We know, everyone knows, whether you do it or not, but you do understand that you have to have some kind of a retirement money. Now, a lot of people work for certain, in the private sector, you put money in a 401ks or you put money into an IRA. But when you come to use this money is another story altogether by itself. You need to be very educated about it. You need to be smart about it and understand how the taxation works and how you can minimize that, if you will, so that you can use it in the best way you can. Basically, utilize what you've done all your life. One of the issues that really changed in the world of retirement last year, actually in 2020, was that on January 1st, 2020, the law changed on the thing that used to be called stretch, meaning that if you are married and say you have an IRA and you retire, if the person, you have an IRA and obviously you're using it now and you pass a certain age and you're entitled to use that money, that's fine. But then once this person dies, God forbid, what happens is the money could pass on to the spouse, which is still fine. So the wife can become, or the spouse can become the owner of the same account and use all the privileges and benefits that that offers. But once it goes beyond the husbands and wives, then it becomes an issue. So the law named Stretch, what it did was that you could say you have parents that passed away and have hundreds of thousands of money sitting, or dollars of money sitting in some sort of an IRA account. You could stretch that, meaning that you could take the money, not pay the taxes on the whole thing up front. Regardless of what age you're in, you could take so-called the required minimum distribution at a lower rate, which would have avoided paying the taxes on the whole amount up front. And we're talking about lots of money here now. Just imagine, just to give you an idea again, you have $100,000. Once you take that money, $100,000 will add on to your income for that year, which definitely puts you into a higher tax bracket. Therefore, you pay much more taxes, easily about 40% taxes in California with, the feds and state. So of the $100,000, right off the bat, $40,000 goes into taxes. And how could you avoid that? Well, what you could do was to use the stretch law in the books, and then you start taking the required minimum distributions, even at the age of 40, at a much lower rate, and avoid paying taxes until you reach the age that you want to utilize that money as a retirement money. And then you then at that age would pay the normal RMD percentages to this money. And bingo, for all these 10, 15, 20 years that you've had the money, you've avoided paying taxes. Or not, forgive me, I have to rephrase that. You have deferred paying the taxes, basically.
Right.
So that law changed on January 1st, 2020. So all of a sudden, that thing is thrown out the window. So here you are, have X amount of money in the IRA with your husband or wife, and then, God forbid, once you two have gone, now all of that money, once you go to your next of kin, has to be taxed at the full rate. So the situation that I had, it was very similar, except with my case today was that my client's heirs or beneficiaries was disabled. And there's this clause in the law, which we have to actually research and find out, that allows that there's 5 different provisions in the law that you can use it. And it's just not disability. There are 5 different issues that you could use to kind of still use the same law that has kind of been terminated still. So we had to deal with that, which was quite interesting because in this case, it was a large sum of money. And luckily, we managed to save some money for the client. But it's done a big damage to the industry or to everyone around dealing with the IRA and the retirement money. So it's quite stressed out today on that, and I wanted to share that with you guys or whoever is listening to us to understand that there are still things you can do here and there, but I mean that was a huge blow to the IRA monies that happened in January of 2020. Of course, you don't have to pay the ways to, again, that you don't have to pay taxes on the whole thing in 1 year. And we can still, under certain conditions, defer it over the next 10 years. But that's all there is. Right now, we can do to sort of defer the taxes in a longer period as opposed to pay the whole thing lump sum. But that was a big blow. But then simultaneously with the same change, the age of 70 and a half changed to age 72, which means a couple of more years extra. You do not have to withdraw money out of your IRAs if you don't have to.
Excellent.
So it was quite a day today dealing with that.
I bet. But it's totally amazing that you're giving us all this information because it can, of course, apply to a lot of people who have IRAs and their retirement ages. And then, of course, I mean, in this incident, apparently the couple both deceased. Is that why? That when it comes
Yes, unfortunately,
I see.
This was the situation. No, the spouse, the husband passed away a little bit a while ago, but the wife died after this change in the law, which then makes it very impossible to deal with that. And luckily, we were able to find this situation that it's not easy to find these things, even though it's there. You really have to research to find out.
You have to dig in and find out.
Yeah, it's not something that you openly come to and find. But anyways, I mean, these things happen. But one of the other things, if I can very briefly spend about a minute to explain.
Please, we do have a couple of more minutes, please.
Okay, when you come to this kind of money, Suzi, unfortunately, it all depends on what kind of, the socio-economy of the whole thing, with what group or who you're dealing with. A lot of the younger kids that come to this kind of money, it's like winning a lottery. It's gone in no time. And I've seen that over and over and over. And one of the things that the stretch law helped us do was that we could kind of explain, if you took this amount of money, yes, you could have access to this kind of money, but yet you have to pay an X amount in taxes, which is 20 to 40%, sometimes 50%, depending on how much it is. Whereas if we do it this way, we could save it that way, because we could save paying these 30, 40, 50%. So it kind of helped also people to be able to save money without going wild on that, because I've seen also the other side of the coin, that people get this kind of money instead of doing what they're supposed to do with it, they buy a Ferrari. So it's also common when it comes to younger kids, when they come to this kind of money also. But anyways, in all, there are ways that we would like to, anyone that might be interested, give us a call and we can show you how we can set it up while you both healthy and have this money and accounts, so that this kind of things can be protected down the line should not anything happen to the existing law between now and then. That's something that can easily be done, and depending on how old you are, how old your kids are, and all that. So that's also another way of kind of going around this situation.
I see. Well, you basically almost answered both my questions that I wrote down to check with you, talking about this case that you had with your client, which is lovely, actually, because we can kind of understand more when you bring in examples like this. So it's easier to follow what you just talked about.
I think so, absolutely. I think having live cases, talk about it, I think it's easier for people to understand that these things happen every day, and if you have the chance to avoid it, of course you would do it differently, obviously.
And on kind of a note here, that my understanding is having a living trust or things in that nature, would that not also help your next of kin and your
well, the living trust does
kind of tell them, make sure, like you said, like at their 18 years of age, they won't end up buying a Ferrari.
Yeah, well, quickly, yes, absolutely. When you have a living trust, it doesn't change the amount of taxes in essence. Well, it does if you do it wisely. It doesn't reduce really much, and you can always defer it for a longer period. But typically, yes, if you can have trustees that basically will control that, and they can give monies to younger beneficiaries, to installments of money, as opposed to
in other words, you can tell them, like at 25 they can take so much, at 35
Correct.
they can take the rest, or things in that nature. At least this is my understandanding.
Yes, you could assign a trustee to sort of pay for college tuition and the living expenses and an X rate every year, and then once they come to say 28, 29, 30, then they can give them the lump sum. So at least the money goes into a good use. Yes, yeah, I know it varies, obviously. Decisions you can make on your living trust. It doesn't change taxes a whole lot, but yeah, if you could control as to how it's used.
Totally. Well, thank you so much. Listeners, please do check us out. All our conversations are at www.fmisinc.com. And also you can check out Live with Suzi on all sorts of social media sites. and follow us and share our conversations with others, especially the English-speaking peoples and followers and friends, so more people get to hear this conversation, which I think is pretty useful. And we using Shane Malek's knowledge, a world of knowledge he has, and he shares kindly with us. We appreciate your time, and until 2 weeks' time and another series of Live with Suzi, we wish you all the very best.